Hello, trading is closed on December 23rd, 2024. We always start with our disclaimer. We'll go over our calls, make our predictions. It's my trading plan for Tuesday, Christmas Eve, 24th of December, 2024. Please remember, my calls can be wrong, my calls can change, trade at your own risk. I don't always trade on these shortened days, and I have personal business Thursday afternoon, so I may not be risking my own money on any of these calls. Look for the pattern with the early high, which is this. Tomorrow should have the early low. We looked for either a gap. We looked for a strong move into the opening, either a gap and a prompt move over this high, which didn't happen, or a straight line drop. Well, I've seen straighter, I've seen deeper, but I'm going to count that a straight line drop. And in the straight line drop pattern, usually you don't have to wait too long for there to be more weakness, even though the rest of the day rallied. It doesn't mean the weakness has to come tomorrow, but doesn't mean it won't. We had some targets. We said if we gapped down, that we could see 58, 54, 52. If it didn't print, we'd say we forget it. We gapped up, so that was killed before the open. We still had a target higher if we went up higher of 60, 59, 18, but we said that MEJT almost always leaves a failed target at a major change in trend, which is what I'm calling this. This is just a reminder of what we said. There were numerous signs of a rally before we dropped, and we got the rally today, but all these other things are still true. The breadth did not improve with this move up, and that means fewer and fewer stocks are taking us higher, and that just can't stay forever. We also had a straight line move. Usually you need follow through if it's going to work. We still haven't. We've spent a day and a half. We haven't gone through this high, and that's a sign of weakness. Now, we could still do it. You could gap up tomorrow, take this out. That we don't know. But the failure to overtake this high when in all this time, right now, is a sign of weakness, and the straight line drop pattern is a sign of weakness. So the time of year is a bullish time. I'm a little bit leery of fighting the calendar here, but this is a weak pattern. We got an ultimate buy signal right at the low, and that certainly worked. This drop was called false, we retraced. This rally was called false, we retraced, and that's already played out. Well, this is the count we've had since the high. We had the ending diagonal triangle right here. That worked. We had an ABC. That was green A. If you look at what could be green B, you have an A and a B, and if you measure the height of A and set that at 100, B is right at 50. Now, C is right at 50. Now, it doesn't have to stop at 50. It could be 61.8%, could be 100%. Nothing says it has to stop here. It's just one of the places it could stop. And what's concerning to me is if you measure the last drop, that's exactly a 61.8% pullback. So we have a wave count having resistance here. We have a Fibonacci retrace having resistance here. And we have failure to follow through to this rally finding problems here, and we have the straight line drop pattern. All you need to do is to find the way to count this last move up as a complete wave, and that's not so easy. But I think it's possible to do it. If that's your A and that's your B, C is exactly 1.272 times A. And if you look inside B, you have your A, your B, and your C, and C is exactly 1.618 times A, And if you look inside your B, you've got A, B, C. C is exactly 0.618 times A. Now, just because all these fibs work, it doesn't mean some other count work. It doesn't mean some other count won't. And it doesn't mean you won't gap up and kill the whole idea. You can't say that. Just because one set of numbers works doesn't mean some other number won't. But that's a lot of things arguing for this stop holding. And if it does hold, and don't forget, this could be interpreted as a wall into the close. If that's a wall into the close, we're going to move down right from the open, not overtake this high, and undercut this low promptly. And if that happens, that's an if. I mean, you have what you need for a top here. And this could be quite a top. I mean, that's not the one I want. I mean, this green A is a pretty steep drop. If green C is equal to A, which is possible, you're talking about a doozy of a decline. And this doesn't even have to be wave B. We could still be in wave red C of green A. I mean, you could do this. There could be a drop right from here. You could still be in the A wave with a B and C to go. I mean, it doesn't break any rules. It's not my first count, but it doesn't break any rules. So if this holds, which you don't know yet, but if this holds, we have all we need to start the drop right now, even though it's just the wrong time of the year to look for it. I'd be a lot happier time-wise if we waited until January, but I don't always get what I want. And when the indicators all come into alignment here, you have to consider the possibility the Christmas rally is going to be a Christmas collapse. That's an if. It's one of the possibilities. So Tuesday's pattern has really low regardless of where we open. Tuesday's a stub day, which means it won't be a full session. One can't be confident in the timing of one's calls on these days, and many times nothing happens and the move takes place on the next full day of trading. Now, it's been a day and a half since Thursday's straight line advance. That's this hidden under there. You've not managed to clear its high. The failure to follow through is a sign of weakness, and the longer we fail to overtake that relative high, the more convincing the weakness becomes. Breadth has shown no improvement, so it should be a matter of time till a sizable correction starts. The normally bullish holiday period may serve to delay things, but there's strong Fibonacci and Elliott resistance at today's high. It's one of the possible places for a drop to begin. All we need is for the high not to be violated significantly. I mean, if you go past it by 1 cent, I don't care. But if you go past it with any degree of significance, all these fib ratios are going to fall by the wayside. We could have the normal holiday rally, and that we don't know yet. Now, it's possible to interpret the late rally as a wall into the close. Wall as a panic buying by amateurs. And if so, that's an if, we should drop right from the open and promptly undercut the relative low. Bulls can still save the day temporarily, ideally by gapping up, which would put higher targets in play before the reversal starts. Nothing I said today stops us from gapping up and going higher up to this number. I can't say it's impossible. There might be some other way to count this. But if we do drop right from the open, if we do undercut this low right away, I mean, there could be quite a drop, calendar or not, and we're not going to know that until tomorrow's open. So it's the pattern with the early low. Through a bull, cross your fingers and hope we go higher and delay things. We're close to a major drop here, and if we gap and take this out early, for instance, it could be starting right now, Christmas Eve or not, and that's today's call.